Hopefully everybody's good. Yeah, it's on Monday, and I'm going to do a quick review of what I'm expecting today and maybe tomorrow. So, without wasting or without any ado, let's get cracking. Let's see what the market really has. How is the market really playing out? So, we're in the monthly time frame, and as usually, what one of the things I'm always looking the market. I want to see uh, the power of three: the accumulation, the manipulation, and the distribution phase. And usually, if you are in a monthly candle, I'm expecting to see um, an accumulation at the maybe first week to the early second week, and during the second week and probably the part of the third week, I'm expecting to see a manipulation. Then the rest part of the month, or the remaining part of the month, the third and the part of the last week, and also the part of the second last week, and also the last week, I'm expecting to see a distribution phase. So I guess you can see we are in the remaining with 11 days to go before the month closes, and so far the accumulation phase has now uh, we've called it off, and the manipulation phase has also taken place. Now we are in the distribution phase. Okay, so that's how I like reading my prices. So the monthly, now I'm expecting a distribution. You can see we have this huge week higher. This is the manipulation phase, and this manipulation phase rallied to engage this buy side liquidity above this zone. So currently, since we're here, I'm expecting to see in a distribution phase, whereby I'm expecting a lower retracements. So after that, I retrace to the weekly time frame and see what's happening over there. So over here, what I can see in the weekly time frame is we had this order block being respected. We had this retracement higher, and I guess using the body of that the this bearish week, I want to see where did that week retrace to the next week. So using the body from the high to the open to the close, we can see it retraced uh, to the mean threshold of that candle, the constant encroachment of that candle, the midpoint in short of that candle. It overlapped higher. So, and maybe let me undo that. And something that was above that the market had driven to. So if I'm expecting a bearish monthly, because we have said I'm expecting a distribution phase, a continuation of the distribution phase lower. So we've seen the previous week it retraced to the above the mean, the constant encroachment of this week, this candle here, this down close candle here, then lost in strength and closed there. I guess at the quarter. Let me put on the levels. So both the a quarter and the three-quarter level, yeah, you can see it closed below that the quarter level. And generally, since I'm bearish, this is the draw on liquidity, this sell side liquidity below there. So let's go to the daily and see why did last week retrace higher and to which level. So I'll delete this Fibonacci tool. So why did it retrace higher? Because we have two things that drive the markets. Okay, we have liquidities and imbalances. Above here, we didn't have any imbalance other than this, whereby we saw this candle close above these fair value gap. Yeah, this inversion fair value gap, which was a clear indication that sorry guys, which was a clear indication that we are going higher for these buy side liquidities. Okay, we had this buy side liquidity here that the market engaged. You can see how this market engaged them and closed inside the liquidity. Okay, we have something. I usually have these conferences also, like if a candle closes inside liquidity and we have this bear candle close below this candle, then we should be looking, or for entries we should be looking, this is a good example. Our entries should be around the zone where the market retraces to make these, to create an immediate rebalance. Okay, you can see here the market had retraced over here today. The market has retraced higher, creating an immediate rebalance with these previous it was on a Thursday, so we have no imbalance over here. But this candle had closed inside liquidity. It grabbed liquidity, then closed inside the liquidity. Okay, if it closed above this zone, above the liquidities, then it could have been outside liquidity, but it closed inside liquidity. Therefore, it's a confluence that somehow, if we have a, like for our situation, we have the monthly candle in a distribution phase, then it's among the confluences. Then we have these other candles that created a change in set of delivery by closing below this low. Then these are good thing to see, that all, since also I'm bearish, so it's a good thing to see these after seeing an immediate rebalance over there. Then you can see this candle lose its strength lower after this buy sell liquidity has been taken, and we have these order block. It's a mitigation block, by the way. If you've been watching my previous video, I was talking about an order block, but it is a mitigation block because it had been utilized already, right? So yeah, this is a mitigation because over here it did its job by preventing higher prices. Prices tapped into this order block here, then we had it lower, and it's a bullish order block because it supported prices higher. But with this candle, it was violated by closing below the low of this order block, right? So if an order block has been violated, it's no longer an order block but a mitigation block, because it's mitigating price from higher prices. It's preventing higher prices now. It's no longer supporting price higher but preventing higher prices. So that's why we call it a mitigation block. So you can see how the candles were tapping into it, then drop lower. Over here we can see the bodies respecting this mitigation block, but the wicks were doing the damage. Yeah, and since I've seen these daily a daily close inside liquidity, and also we have seen these change in state of delivery, and I've seen an immediate rebalance with the daily or the daily candle. So for now, and I'm now bearish, but I'm waiting for my trading time zones, because I trade New York time, so I'm only waiting for my time zones for an execution. But before that, I have to read price and understand what price is presenting. So before that, I would like to note these immediate balance over here. I'll delete that. So below the low, there is the low. Dang, I want to get the low. I'm using my phone, by the way, that's why. So it can be hectic, but yeah, that is it. So this is the immediate balance. I want to make it trade, because so you can see we have already an immediate rebalance in the daily time frame. Also now over here I can balance it like that. So over here you can see from my previous video, I guess you will go and check how I did the last week, the previous video before this. I drew these while I was recording a video, so you saw it. So for now, I don't know, should I move it? Yeah, just slightly or I should make this 4-hour fair value gap, extend it the other side. Yeah, so I drawn this. I want to see a market retrace into this for fair value gap, then retrace lower, and I would love to see a breakaway gap whereby there's a gap above. Okay, for this instance, I don't want to see this gap being filled, because I anticipate to see it as a breakaway gap, also a confirmation that we are heading lower. So one thing I anticipated is I want to see this retrace to the constant encroachment of that 4-hour fair value gap, and I guess you can see where the wick is at. It tapped into it and closed below that, below the 4-hour with an indecisive market candle. Sorry. And now I'll be waiting for my time, for the New York time, so that I may see what's happening. Also, I'll be watching these this week. Sorry, let me retrace, move that. Yeah, I don't want to delete it because that's what I'll be using, and I want to use the high of that week to the low. I'll be watching the constant encroachment of that week. I want it to be tapped into. I will anticipate it to see it being tapped into, then a drop lower. If the market taps into that constant encroachment of that week, then that will be a good entry. So I'll mark it there. So this red line to me is the week's constant encroachment. So I'll label it as W, constant encroachment. Yeah, and let me put it above. I don't want this video to be that long, because in the evening also I want to upload another video on how the market played out today. So, and also I have this fair value gap. Let me measure it, by the way, to see if the market has already tapped into that constant encroachment of this fair value gap using the high and the low, these candles low, these candles high, these candles high over here, and these candles low. You can see the market has already tapped into its constant encroachment and lost its strength. So it's a good thing to see, and letting a breakaway gap above. And so in the 1-hour chart over here, it's clear, and from the high, that level, to this, to the low, you can see how the constant encroachment of that 4-hour fair value gap has been tapped and the market lost its strength. But we have been having this consolidation here with yeah, this consolidation, we can see that consolidation, then the liquidity has been grabbed, the market tapping into the 4-hour constant encroachment. This is the 4-hour week constant encroachment. Maybe it can be tapped into or not, but we'll be watching that. And now what I'm expecting to see, I want to see a clear market structure shift, right? So all this liquidity, we have this consolidation, the liquidities has been grabbed, right? So liquidity has been grabbed above all these highs. We have these liquidity grab, then we have this displacement lower that has closed below this low. So we can see these start to drop lower, but I'm not rushing into these. I'll be patient. It's past, no, 2 to 5. Yeah, London session has ended. So to those who are in London, I guess they've got their sell, but I'm waiting till New York time to look for clear entries. Also, I'll be watching the market and I'll do a video after that. So my targets for today, maybe these lows, we have these lows that will be taken, also these lows, and maybe these equal lows, right? But I'm not thinking that today we'll reach here, but let's wait and see what the market will do for us. So that is it. I'm bearish. I guess I've explained what I had anticipated. I drew this last night before the market opened. I want to see it trace, and you can see I called it off and it has reached to a point where I had anticipated, and now we want to see drop lower. We have these equal lows over here, below here, that should be taken. So below here we have liquidity resting here. So these are the targets for today. These equal lows, we have these triple equal lows there, and also we have equal lows here. So I'm bearish, and I'm waiting. I want to see this market tap into the 4-hour week constant encroachment maybe, but we have this other order block here preventing price higher, but maybe a week will do better than sell off. So that's what I'm watching for today, and hopefully I'll be reflecting what happened today in the evening. So see you in the evening, guys. Bye bye. To those who are learning, let's learn together. Let's get to understand the technicals first, because in trading they say psychology is everything, but also with psychology without technicals, it's a zero fucking work. So before psychology, I want to master the technical part, and then also master the psychology part. But because the two things are psychology and technicals will lead to profitability. So thanks for being around, thanks for watching this video. I'll be doing this all day every day, getting to improve, getting 1% better every day, doing everything we love doing. So before I finish this video, please hit that like button. If you have any comment, please I'll reply. Comment, write down whatever you're thinking, ask a question, I'll get back to you. And also please hit that subscribe button so that whenever I'm live you may get to view this video. We learn together. So until next time, guys, bye bye, be safe.